Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar extends itself a little bit further towards that resistance of 73.1530. There is minor resistance somewhere around 72.80. However, the market is somewhat getting a little bit apprehensive as the short covering now comes slightly less since the rebound off the base around 71.25. As we get closer towards the highly anticipated two-day summit, which starts on Friday, to viewing the US Federal Chairman Jerome Powell as the central banks start getting together at the annual Jackson Hole Symposium, the market will be looking very closely to see what the chairman has to say. The Fed has started discussing to pull back its 120 billion a month bond buying program by the end of the year. However, the market is still questioning on how the variant COVID virus is actually putting a bit of a damper. So we could see a little bit of a mixed story coming out of the chairman. Still, the market today viewed the release of Australia's Q2 private capital expenditure, or CAPEX, which crossed 2.5% market forecast to 4.4. But previously, we saw a rise of 6.3, so the number wasn't too bad. Looking at the technicals, as I say, the RSI is dropping slightly, so we may see the market ease up and the short covering start to wane a little as we get closer towards 72.80 or 73.1530 and then see a pullback to 72 cents. It is only viewed that a close under 72.05 would reinstate the downside to 71.25. As the dollar index remains somewhere around 92.80 to 93, the euro edged slightly further to the top side on Wednesday and now looking closer at 117.80.95. It is anticipated that the market may find a bit of a heavy supply area around this region, although the trend is seen around this sort of level holding roughly, if I just get my cross, around this 117.70. I've extended it slightly higher just for a little bit of slippage in case we see that, and most probably we may. But nevertheless, keep an eye on the dollar index, because if we do find that the Fed chairman does actually start talking back some of the physical stimulus tightening and also comments on inflation, we may see a little bit more whipsaw price action and maybe a drop back towards this target of 116.10.25. Dollar yen is also nudging higher and now looking at this level at 110 figure 20 for the fifth consecutive time. As it stabs at this level here, you can see the market doesn't want to stand or hold above that level. Still, the technicals are still promoting another test. Therefore, I feel the market may actually win this challenge around this 110 figure 20, but likely to find heavier resistance as the hurdle gets closer towards 110.70. I feel the market will get in a bit of a point where it won't sustain like previously, a heavy fall. Therefore, could see the same pattern repeating above 110. Looking at sterling, the market is edged slightly further towards that 138.20 level. However, the closer we get to the US Federal Reserve's annual Jackson Hole Symposium, is that the market may actually get a little bit concerned as it gets closer towards this 138.20 level in case we do see a dollar strengthen. However, with that being said, if it turns out to be a non-event, then we could see the greenback actually slide further and prompting a further gain in the sterling above 138.20 and up towards 138.80. But as I say, as we get closer towards the summit, activity and volatility will increase. Sterling yen looking towards that resistance of 151.70, and most probably find a challenge that could reject and look back towards the bottom side of the range, coming around 150.70 or maybe down to the 149.80 level. I'm not getting bullish closer towards this top side, as we've seen failed attempts above and most probably see this again. Gold is weaker since rejecting that level of 1,806. And from there, the market is now looking back towards this level of 1,770. If we see a close under there, then that would reinstate the downside towards 1,748 and maybe even lower towards the region of 1,720 to 26. However, as the bears are most probably feeling that they're winning this case at the moment with the RSI breaking through the midway point, and surprisingly a little bit weaker than the dollar index. So in terms of how this pattern unfolds, let's see if 70 does give way. But if we see a reversal and we break above 1,806, then this would reinstate the top side to 1,830 to 35. But at present, the last 3 days of candles, looks like the bears are getting the upper hand. Wrap it up with oil, with a free, strong, or more to the fact, bull run, is that we could still see the upside continue. I'm not going to get too negative at these highs considering the strength of these candles. If you count the 3 candles and then looking back on the slide, there's like 5 or 6 here. So the weaker play has actually come back stronger. The top side target could hold around about $70 a barrel and then see a rejection back towards the region of $66 a barrel. With the MACD just giving us a positive signal, matching up or marrying up with the RSI, does support the top side at present. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day.